Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Hyperscale Data Inc. and let's just say, after looking at it, you might need to superscale your expectations or lower them. You'll see what I mean when we talk about stock dilution. This report is what's called an 8K filing, a kind of quick update a company gives to the Securities and Exchange Commission, the SEC, about important events. In this case, it's about them issuing a whole bunch of new stock. Sounds simple, but with a lot of new stocks, it can get rough for the existing stockholder. Is there anything else? Let's find out. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about this company as well as others. This report is dated June 25, so this information is about what happened around then. Keep that in mind as we go through this. Okay, seems like a good place to start checking on the company. Here we see the different types of stock the company has registered which you can trade. There's Class A common stock, which is basically what everyday investors can easily buy and sell. Then there's also something called 1300% Series D cumulative redeemable perpetual preferred stock. I know it's a mouthful, but it's a different type of stock which gives investors a fixed 13% return, meaning it pays a specific amount on each share. If you own that, you will get paid before common stock owners. This type of stock is often seen to keep a company afloat, especially if they can't get loans. Now for the juicy part. Item 3 tells O2 tells us about unregistered sales of stock, which basically means the company issued new stock without going through all the usual steps to register it with the SEC. Basically, the company created more stock outside the registered route between June 16th and June 20th, 2025. Hyperscale Data issued over 1.8 million Class A common stock that came from converting almost $3 million of some special convertible of the Securities Act of 1933, which is a rule that allows companies to skip registration for certain private sales. And between those same days, they issued another 247,000 shares when about $480,000 of another convertible note was turned into stocks. This, they say, was okay under Section 3 Article 9 of the Securities Act, a rule that allows companies to exchange securities with existing security holders without registering. So after all that stock got issued, as of June 20th, 2025, Hyperscale Data had over 6.6 million shares of Class A common stock out there. This is a really important piece to remember because it has huge implications on the overall value of the company. So what does that mean? It's called dilution. Imagine you and 3 friends own a pizza. Each of you gets a quarter of it. Now imagine suddenly there's 10 of you. You each get way less pizza than before. That's what happens when a company issues more stock. Existing shareholders, you now own smaller pieces of the company. This can lower the value of each individual share or stock because each share represents a smaller portion of the company's assets and earnings. Why do companies do this? Usually it's to raise money. Maybe they need cash for a new project or they are trying to pay off debts. So in essence, the company got some quick cash from people that converted the stock and they were able to make quick moves and decisions by selling it outside the registered route. But current stockholders are in serious danger of having the overall value of their stocks go down. Finally, item 9.01 just lists the exhibits to the report, some of which are in a special computer language called inline XBRL, which helps computers read the data more easily. All right, let's step back for a second and look at everything. Hyperscale Data is issuing a ton of new stocks without registering them with the SEC. This type of behavior isn't necessarily evil, but it signals one major thing, which is that the company is in desperate need of cash. So much so that it's willing to sacrifice their existing stockholders to keep afloat. This stock issuance significantly increases the total number of shares outstanding. This dilutes the value of existing shares, potentially hurting investors who owned it beforehand. Ofakas Badi Efshim Sarkeben increases the total number of shares outstanding. This dilutes the value of existing shares, potentially hurting investors who owned it beforehand. Althai free are the big risks and opportunities here. The biggest risk is that existing shareholders will see the value of their investment decrease because of dilution. On the flip side, if Hyperscale Data can effectively use the money they raise to grow the company, it could eventually benefit everyone, even if it hurts in the short term. That's a big if though. Another potential opportunity is a hedge fund or activist investor may see this as a chance to make big changes later. In conclusion, Hyperscale Data's recent stock issuances raise some serious red flags. Dilution is a real risk and it's up to investors to decide if they believe in the company's ability to turn things around and make those new shares worth the eventual damage. Alright, that's our breakdown of Hyperscale Data's latest filing. What's your take on these numbers and what they signal for the company's future. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.